All right. Hey, what's going on, everybody? Christopher Hicks with TexasWest Capital. We got Beards in Bitcoin today. Those two guys you love, and one of them you may love to hate sometimes, but he's going to tell you what's on his mind. We got Andrew and Tillman sitting there waiting in the wings. Before we get going here, guys, as always, hit the thumbs up, hit the like, leave a comment. Unless you're the idiot who's just rude and disrespectful all the time. I'm not going to block them. I'm going to let them keep making a fool of themselves. But man, oh man. Tell you what, guys, sometimes internet proves that people many times don't understand how to communicate very well. They just kind of say whatever's on their mind, regardless of anything else. So, hey, we got some good stuff to talk about here. PPI, we got CPI, we've got Bitcoin up, stocks up, we got 10-year down, we got DXY down. Guys, this looks good. So let's go ahead and bring on Mr. Andrew and Mr. Tillman. Gentlemen, how do you like today?
Doing good. I love it. It's what to be expected, but exciting times to live in. What do we have? T-minus 5 days to see what can happen.
Yeah, T-minus 5 days. You made a comment in the we were discussing prior to the show here about everybody thinks Trump is just out there kind of shooting off at the hip there. But it's not really what it is, right?
It's the point I was making is that Trump is smarter than all the media pundits give him credit for. And for a long time, for a period of 2 weeks after he made announcements as to what his cabinet picks were going to be. Not surprisingly, the liberal media was attempting to tear apart those appointments. And so, hey, we're gonna buy Greenland. We should make Canada a state, Gulf of America. And so now the media is running around. Okay, he's flooding the zone with so much stuff that how do they get their minds and heads around it? What kind of narratives are they going to come up with? And next thing you know, we had Senate hearings yesterday, Senate hearings happen today, and there's been no talk about appointments over the past 2+ weeks. It's all about these other things that the media decided to get obsessed with differently than appointments. And so, my expectation is that it would, there was an announcement today that Trump's, incoming team on the SEC side, the economic side, that they're going to pause all current SEC actions, enforcement actions, and completely readjust and evaluate how they treat crypto on a go-forward basis. That's to be expected, but I don't think that because we've lived in this bubble, and the fact of the matter is that most people in this crypto bubble have PTSD, right? That either, you put $10,000 into something and it's going to go to $100,000 in 6 months. You put $10,000 into something, it's going to go to 142 in the next 6 months. There is no in between, right? Yeah. And so, getting our heads and minds around the fact that the change in the regime and the outcomes associated with crypto in particular, we probably still haven't grasped it in a meaningful way. And so, we're on the precipice of, I called in a post maybe last week, Bitcoin Renaissance, crypto Renaissance. I mean, we're on the cusp of it all. And it's interesting that you're seeing in the price action of some crypto, Bitcoin as well, 99K, or knocking on the door of 100K again. But a crypto like XRP up at $3. Yeah. Nobody believed that would ever get back to a number like that, and you did, yeah, right. So it's that the XRP and Ripple isn't doing anything different. They haven't adjusted their brand. They haven't made serious adjustments to what XRP even does or stands for. It's just a rising tide lifts all boats. Yep. And the fact that Ripple's executives have gotten into the inner circle of Trump and the team there, is helpful. And so it's moved that particular asset from, let's call it 50 cents to $3 over the past 6 months.
Yeah. And, when we look at this and we go, okay, so here we are. And of course, Bears freaking out for the 107th time since the 2022 bear market low about the top being in. And then we get Monday's candle. In Monday's candle, we had like a $7,000 swing and we closed like $5-10 above the open. Nice large lower wick, through the range low, came back up. I mean, I've been talking about and describing how the range for the last few weeks now looks like it was a reaccumulation, and that put like a nail in the coffin. We still got people that are freaking out. That we still got people talking about bear markets in for Bitcoin, and we're going down lower, which is kind of interesting, especially with PPI coming in soft yesterday. CPI came in, headline came in, where we expected. But core CPI, which is the important thing, came in, was looking at 3.3. It came in at 3.2. So, it's like this inflation may actually, maybe start, continuing to push down here. That takes pressure off the 10-year, which was, up there. I think it's dropped about 25, the equivalent of 25 basis points today, something like that. But it's ran up 100 points since September. When the Fed first started raising rates. And so now we've got all this. And if we're looking at the DXY as well, again, looks like it's potentially finished a multi-year kind of what we call a flat correction. And so everything seems primed to do what we wanted to do this year, which is our stocks and our crypto going up.
Seems almost inevitable if you take a kind of a step back and look at the entire picture. What's interesting, this Monday and every other Monday, I've had this thought, like the price. We've been talking about this on the show a lot, but the spot price being different than the Wall Street price. And we haven't seen the unhinging yet where they're trading at visible different prices. But we have seen, I did just a little back of the napkin research today on the last 4 big dips during this accumulation phase. And the last 4 dips, with the exception of one, were on Sunday night or 4 a.m. on Monday morning, pre-Wall Street opening. I don't think that's an accident. I think in order to accumulate Bitcoin at these prices, they have to create fear. They have to create fear in the micro sense. And so those drips have been nasty. They've been like single candle, absolute, bottom falling out type dips, but only to recover the following week when Wall Street's open for business. And the exception to that was the December 18th dip. But that was the day that the Fed made their announcement, and the Dow dropped by 2.58%, over 1,100 points. So if they don't have some massive negative announcement that comes out in the middle of the week, the only dips that I can find in this accumulation phase are on Sundays. So I thought that was a really interesting data point to kind of look at and to follow going forward. And what it tells me is there's such important inflows into the ETFs that are acting as a floor on the price, that to move the price downward, you almost have to do it when the ETFs aren't open and or thinly traded in the overnights. So yeah, I don't. Anytime you have a accumulation phase, you have to ask yourself, how are the big boys accumulating during this phase, and what do the dips look like? And the dips all look like V's. I mean, it's like, it drops drastically, but then boom, we're right back up or exceeding where we were before in a very, very short period of time. In my mind, that's incredibly optimistic from a technical perspective. It tells me that there is a pocket of money that isn't sitting at a specific price. They're sitting at a relative drop, right? So they're not sitting there going, I have to wait till it gets down to like, all your friends who have tried to trade in and out of Bitcoin and they're like, well, if it gets down to 40,000 again, I'm going to buy. And it never gets to 40,000. Those are arbitrary numbers that in their mind, they're looking at the charts and thinking that there's significance to them. The biggest players, the people who have to get positions to hedge against inflation, they don't have the luxury of waiting for a specific price. They're just buying every dip. And if the dip's drastic, they're buying more. If the dip's minor, they're buying less. But they're just accumulating. And the technical analysis points to that in spades. And so I would expect that to continue. I would actually expect it to be to exacerbate. Like I think that the larger the inflows on the ETF side, the more attention Bitcoin gets, the more products that are built by the likes of Bitwise and everyone else, the more liquidity is going to be sitting there holding the price, kind of at a floor. And any dip that goes below that will be immediately responded to with a lot of purchasing. So, if that continues and we can track that, then that would be meaningful information if you're a trader.
Well, and I think that was even, if I remember back, we started this podcast here 30 episodes ago. So back, I think around June. And even back then, in fact, I think it was Andrew that brought it up initially, was this idea with all the ETF buying coming in and the expectations going forward that we would have exactly this thing where we'd have, these ETFs kind of providing this floor because the demand would just continue to be so strong. And here we are 6 months later, exactly what you're saying, exactly what's happening here. And what do we expect? We expect the ETFs to have an even better year this year, right?
Well, and a development that happened that didn't get much publicity yesterday or the day before is BlackRock's IBIT, Bitcoin ETF got approved in Canada. You know what actually gets approved in Canada? Nothing.
Yeah.
Nothing gets approved in Canada. In fact, all the exchanges I've ever worked with, both fiat and crypto, abandoned Canada like 2-3 years ago. You can hardly do any financial business of any kind in Canada. But BlackRock's spot Bitcoin ETF got approved for use in Canada. And BlackRock's, that product is going to go chew up a bunch of, institutional money in Canada. It's going to go to grab pension dollars. That's what they're there for. They're not there to grab, some TD Bank account at, in Canada and put a few $100 into BlackRock's product. They're going there to get institutional dollars. Again, the ETFs do provide a floor, and then the turbo that's going to be added to it in 2025 are corporations that are going to put Bitcoin on their balance sheet. Bitwise put a great piece out a couple days ago, and their CIO Matt Haugen, his commentary was basically like, yes, this is a trend, but in 2025, it probably turns into a mega trend, where you go from, let's call it 70 S&P 500 companies that have, dabbled with Bitcoin on their balance sheet to, 200. Again, 200 out of the S&P 500, that's a big number. And then on top of that, the scale at which they would be buying is outrageous. I also saw a stat where MicroStrategy bought more Bitcoin, I think, in 2024 than miners created. Just MicroStrategy. Okay. Now imagine if, the new version of Mark Zuckerberg and want to be, he wants to be in the cool clubs kid with, club with Elon and the like. Yeah. Imagine if, Facebook starts to buy Bitcoin and put on their balance sheet. That's an entirely different deal.
Well, we talked about this, that it went from 30 publicly traded companies holding it on their balance sheet to over 75 in less than 60 days, the last 60 days of the year. I would anticipate that trend multiplying. Like I would anticipate 250 by the end of this year. I don't think it's going to have a slowdown. I think more and more companies are going to be forced to do it, especially legacy companies that are sitting on a tremendous amount of cash and don't know what to do with it. And they've already loaded the boat on real estate and all the other things that kind of work as a hedge. Um, there's one thing that I think people keep missing, which is you compare it to real estate, but there's no carry cost to Bitcoin.
Yeah.
You don't have to pay property taxes. There's nothing eroding your profits and making it less potent than it was designed to be. And we were on a podcast, I guess, a couple days ago, maybe yesterday, and very, very smart guy was pointing out that for a publicly traded company, not only does adding Bitcoin to your balance sheet do the fundamental things that you want it to do, which is hedge against inflation, but it also has a top line magical power, if you will. What's the top line magical power? Well, go look at some of the companies that have basic services. Like there's a cattle company that sells beef, they'll deliver it to your doorbox, to your mailbox. They added Bitcoin to their balance sheet, and you had this tremendous response from Bitcoiners go, if you're going to do that, we're going to support. And they started buying their beef from that company for the sole purpose that they're Bitcoin believers. So you're growing top line, right? You're hedging against inflation. But here's the point that he brought up, and he was Jeff from Bitwise. I'll give him credit. He brought up the fact that go look at Tesla and look at the shorts up until the point they added Bitcoin versus after you add Bitcoin. If you put Bitcoin on your balance sheet as a publicly traded company, you are going to reduce the short exposure to your stock. By definition, anyone who's shorting a stock that sees Bitcoin as a material piece of the balance sheet has to start questioning whether it's a good short or not. And it's increasing the risk of that short position exponentially because you're not betting against the fundamentals of the company anymore alone. MicroStrategy has proven that. I don't even know what MicroStrategy does for a business. I just know they hold enough Bitcoin to where, yeah, exactly. If Bitcoin goes up, they're going to be, kings of the castle essentially. And so, where else can you push what other button on the proverbial dashboard of financial levers and mechanisms can you push one button and get three benefits out of it with one action? I mean, that's very, very unique. And I don't think that it's lost on any of these public boards that are looking at all these other companies and going, well, imagine if we did that, what it would be. And it doesn't have to be 5%, doesn't have to be 10%. It can be 1% of their cash on hand, essentially. And if you have enough companies do that, to Andrew's point, that's more than MicroStrategy's buying. That will eclipse MicroStrategy's purchasing because they can't compete with the collective effort, essentially.
Yeah. And so real quick here, I remember a buddy of mine, Samuel Arms. He's a buddy of mine, and Gary Cardone's and everything. And he's been working over there with the Bitcoin over there in Florida. And they're working. He says it looks like Florida may beat Texas with getting a
Bitcoin strategic reserve for the state.
Yeah, Bitcoin reserve in there. Yeah. So, I haven't heard much though from what was it? New Jersey was one of the first ones to say they were going to do it, or Pennsylvania.
Yeah, there was also a new bill that got put forward in New Hampshire. I mean, it's happening all across states, and then obviously on the federal level. It wouldn't surprise me if in the first 100 days that's a real point of emphasis for the new administration. And at the same time, when states do this, again, those aren't not meaningful amounts of money. States have enormous capital inflows, and putting Bitcoin on their balance sheet is just a force multiplier. It is and has been and will continue to be. So it's very, very difficult to we've gotten to this plateau where, Bitcoin is trading in the 90s and bump up to the hundreds back into the 90s. It's no different than the plateau we were in the 50s and 60s, 6 to 8 months ago. And it has, we've got to a point where it's normalized that we're at this level. Do we go higher? Do we go a little bit lower? What do we do? So we're normalized here at this particular level. These macro tailwinds are going to be probably more forceful than we actually think right now.
So the thing I was thinking about this morning with the, if you bought Bitcoin essentially every Monday at close of business and you just rode it till Friday, I had our software, I loaded those parameters in there to just see, what it would look like. Well, any strategy that has more than a 50-50 win percentage and a greater than 2 profit factor is a fantastic strategy because even if you win 50% of the time, but every time you win, you make $2 for every dollar that you placed, that's really good. Well, this over the last 6 months, if you had done that, you have a profit factor of over 2 and you have a win percentage of more than 60%. So anytime the market gives you something that's so obvious that you can see it with the naked eye and it then run it through historical analysis and it proves out to be true, that should cause you pause and you should start looking at, I wonder what the driving factor of that is. And in this case, it's that the ETFs aren't open on the weekends.
Yep.
So if you avoid the weekends over the last 6 months, you won 60% of the time and you made a 2-to-1 on your money. That's fantastic, and it should actually point to the strength of the market. It should point to the strength of what the ETFs and what Wall Street is doing for the price of Bitcoin. So yeah, I find it very interesting. We're in this place where we've been saying for a long time, there's nothing but good news out there.
Yeah.
And yet, how are they inducing so much fear in everyone if that's the case? Well, these drops over the weekend, in my opinion, are the culprit. That's how they're inducing the fear. That's how they're making, that's how they're stacking essentially. I've said jokes before. There's a million analogies, but the tears of retail fuel the rocket ships of Wall Street. And I don't know what the number is, but I would assume that there's a ton of liquidations during those periods, a ton of margin calls, a ton of people losing their stack, because that's what it's intended to do. That's what you have to do. Have you ever seen one of those videos of the apple orchard and how they harvest the apples now?
Yeah.
They've got this machine that literally straps itself to the trunk of the tree and it just shakes the hell out of the tree, and all the apples fall into the net and go into a conveyor belt and go into the back of the bucket. Shaking something very hard is a very effective way to get fruit to fall. And I would say that this is kind of, it's not a lot of data, but it's enough data to start, making some assumptions and start trying those assumptions out on a larger swath of data.
Yeah, you're still winning with the analogies, man. I mean, every week I think people starting to tune in now just to hear what your newest analogy is. So yeah, if you guys haven't seen that, it is pretty great. I've seen it. Again, you get the machine on the tree, just starts violently shaking there, and they get the net around the tree, and all the apples just fall into it.
Well, and they don't sweat, like after that happens, they don't sweat the apples that are still on the tree.
Yeah.
They're just not right to fall. They just move on to the next tree. They don't spend a bunch of labor, time, and energy then going up and hand picking the remaining 10 apples. It's systematic fruit harvesting, and it's a very effective means to do that. And I would say that stock price, if you shake it hard enough, even if it's in a tight range, relatively speaking, like plus or minus 8%, the dramatic drops, and I think even Jim Cramer, made a repost of something Michael Saylor posted where he said, I'm going to pay Jim Cramer to call all the bottoms because Jim Cramer fell for the fear. Like it dropped, that Monday morning
Almost
when it's
to
down,
the
yeah,
minute.
to the minute, right?
That was
And
crazy.
so I don't trust what you see on a micro level, as I guess the moral of the story, that you got to zoom out and find out what's really the driving factors of those price movements.
That point, the comment from a listener that you just made about people having PTSD from FTX, that's still a real thing in crypto. So, we have customers with with clients about our Bitcoin algorithm and Ethan Salon that we're about to release, and they still can't get their mind around the reality that these are turning into institutional assets where you can trade them or use them in a way that's different than 2 to 4 years ago, because people in this space, they're almost locked into this thought process that is, well, I'm going to put 10 grand into something and it's either going to go to 100 grand in 6 months or it's going to go to $107 in 6 months.
Yeah.
Those are the only two outcomes that exist in crypto and have existed for up until this point. And so we're still fighting through some of that.
Well, I think the difference this year to that point, Andrew, is going to be the magical word of 2025 for me is yield. Yield solves a lot of those problems. For example, what do retirement accounts love? They love dividends. They like to get kicked off a little cash to hedge against the price fluctuations, because it's prudent to do that when you're trying to preserve wealth and not just make wealth. Taking money off the table is a necessary evil to the strategy. And so we've come through cycles where everybody is at 90% invested and everybody is a hardcore Bitcoiner. And we're moving into this new realm where I don't think dips are going to bother people as much, because what does a dip look like if you have 1% of your available cash in it? Well, if it drops 20%, you're down 20 basis points. Like it's nothing in the grand scheme of things. And so it doesn't have the same potency that it does when you have 90% of your net worth in Bitcoin. That's a good thing. That's going to stabilize the price going forward in a way that we've never seen before. And I would argue, the famous last words, this cycle's different. I really do believe that. And I may have drank the Kool-Aid, but it's going to be tough to prove otherwise, I would say, because the ranges have tightened. The volatility has become more isolated to the weekends. The volatility swings aren't nearly what they were even last cycle. Like we have swings of 40%, and we would go business as usual. Now we're crying about swings of 8%. You know what I'm saying? We're crying when Bitcoin goes from 106 to 98. Oh, the world's over. It can't hold 100, and you're just kind of like, man, that's a great headline, but it really doesn't mean anything. In fact, I think it actually is opposite of what's going on from a macro perspective. So time will tell, but it sure looks like we're going to make great time. It's kind of like being in the airplane and you've got that little tracker of how long it's going to take you to get to your destination. What if the pilot came on and goes, hey guys, great news, we've got a tailwind of 200 miles an hour, we're going to arrive in 30 minutes versus 5 hours. Bitcoin has a tailwind behind us that it's outside of our control. It's this macro world perspective of protecting against fiat and protecting against the hyperinflation of fiat. And I'm not one of those people that think that inflation's bad. I actually think it's great. I think it's necessary for a debt-laden economy in order to grow. What I do think, though, is it's an imperfect science that takes longer to rebalance than people give it credit for. What do I mean by that? Well, we're on the precipice of technology that will change the landscape of the world unlike any technology that's ever existed, including the automobile. More people will use blockchain 20 years from now. More people will own Bitcoin, in my opinion, than people who own cars. And it's weird to think about it in those terms, but I want you to think about how many unbanked people there are in the world, like 2 billion people.
Yeah.
How many of those people are going to want to be banked? And now that they have access, or they're beginning to have access to, and the knowledge to get Bitcoin, they don't have to go down to a local bank. There doesn't have to be any brick and mortar infrastructure built in their country for them to become completely banked and to participate in a financial network that was not available to them in the past. If you just talk about that alone, forget Wall Street, you're talking about a huge rising tide. But then when you talk about all the derivatives and the options and all the things that are coming out, we heard yesterday from Jeff that they're going to basically they've filed, and I don't know if it's been approved or not, but they're trying to issue Bitcoin, essentially a mechanism where you could buy covered calls with Bitcoin on Bitcoin.
And this is Bitwise, right?
Yeah, Bitwise, yeah. So think about that. Like, I know a lot of people that trade that way and buy covered calls, and the philosophy behind that, if you're not familiar with it, is this: if I have a stock that I really believe in, let's call it Nvidia, Tesla, whatever it is, and the blue chips, and I want exposure to that over the long term, I want long-term capital gains, I would be investing in that anyways. If you play a covered call strategy, you're essentially guaranteed the coupon that you make, or the cash value of that investment, and you can cash those out when you're in the money. You can take money off the table in the form of like a dividend, if you will, and you can make significant cash flow on those bets or on those trades. And if you're wrong, if you're not in the money, you just stick it in your long-term retirement account and wait 2 years, and you're in the money on the long-term basis, and you pay less taxes. So you're kind of getting this cake and eat it too, where the yield of holding the position is worth it by itself. Forget the long-term trajectory of the asset. And when you have increased volatility, which Bitcoin does over all of those other securities, you have greater potential to create cash flow through yield. And at the same time, if you're wrong on those trades, you're just not going to sell them, and you're going to stick them over in your long-term pile, and you're going to wait 4 years or whatever it takes for the cycle high to be reached. And that's when you essentially get rid of those positions. And so the healthy balance of yield producing assets coupled with long-term appreciation potential, that's what 2025 is about. And I think that you're going to see the more sophisticated people trading that way in the markets more, but you're also going to see the yield on the fact of the banking side. And I think in the next 4 years, you'll be able to walk into pretty much any bank in America and tell them that you have Bitcoin to deposit, and they will pay you a greater yield on those Bitcoin deposits than you get for cash deposits. And that's incredibly exciting, because you don't even have to have the sophisticated means of going in and buying covered calls on Bitcoin. You can just go deposit your Bitcoin at a bank, and they pay you for that. That coupled with the long-term appreciation potential of Bitcoin is game changing, in my opinion. It's only going to drive the participation that much higher.
And that's about to happen. The wheels of that are about to happen when they repeal SAB 121.
Mm-hmm.
That's the first thing on the docket.
Well, go into that, Andrew, because that's significant, man. That's huge. No bank in the world would put Bitcoin on their balance sheet before that gets repealed.
Yeah. So as a bank, SAB 121, if you're going to quote unquote custody Bitcoin or Ethereum, you have to notate on your balance sheet that that's a liability, not an asset, which is, just wacko. right?
Well, what it means practically is there's no reason to put it on your balance sheet.
Right.
Banks are in the business of putting assets on their balance sheet so then they can lend at a multiplier against that asset value. And if it's a liability, it means you have to add more assets just to cover the liability, and there's no lending that can go on with that coverage. Like if I have $1 million in Bitcoin on a bank's balance sheet, I have to put $1 million in cash and leave it on the side just to account for the Bitcoin position, which means I can't lend that million out 10 times in loans of 10 million, which is literally how the bank stays in business, on the interest being paid on those loans.
Unless you've got an exemption from SAB 121, which is what Bank of New York Mellon did, and so they don't have to treat the custody of Bitcoin and Ethereum that way. So that rule is going to go away. It's not even a law. There's just nothing that has to happen to quote unquote repeal the law. They just strike it off the books. It's just an accounting rule. And so that's going to go away, probably in the first 60 days of the new administration. So banks will be incentivized to, custody Bitcoin and Ethereum and the like. And so there'll be a new, again, remember that the, kind of the structure and the business opportunities as a banking, institution, they've been the same for forever, literally forever. And so this is a new product class and a new revenue opportunity for banks that they'll figure out fairly quickly.
Well, and it's a competitive advantage, like I said before, on the top line growth side. If you have Bitcoin and you want yield, where are you going to go? You're going to go to the banks that offer the yield on Bitcoin deposits. And so what is that going to do? That's going to naturally increase the deposits on hand of those banks. And it's no different than, like, just look at it from a Trump's campaign perspective. Trump, let's, for all intents and purposes, for the analogy, say that he's a bank, right? And all of the deposits are the donations that went to him for his campaign, right? It takes a lot of money. Lots of deposits have to be made in order for that bank to survive. Well, did Trump increase donations by including crypto and specifically Bitcoin in his, in his forecast and in his kind of objectives? Absolutely he did. I don't know the exact amount, but I heard he got $50 million just to go to the Bitcoin conference. Well, that's no different than the banks. There will be an economic response, a driving force of deposits when a bank pays a greater yield than cash. And there's no reason why they shouldn't, and there's no reason why they can't. And I would predict that they all are going to in a very short period of time. Now, the question for me is really, do the traditional banks lead the charge on that now that we've got such clear skies in front of us legislatively and from a governance perspective? Or does it still take a Michael Saylor that takes his deposits and quote opens up a bank? And that's going to be interesting. I think it'll be a race to the finish line. And this, it's kind of like everybody saying, you get Bitcoin at the price you deserve. Well, you get the growth curve at the price you deserve. Like if you adopt Bitcoin early, like some of these companies where you're selling beef to you mail by order and they quadruple their top line sales, that's going to be the exact same effect that it has on the banking system, but even more so because people care a lot more about their money than they do about their food. So huge change coming on the banking side of things that by definition will grow the deposits, right? And by definition will bring the Bitcoiners out.
And that's the whole point of, we still probably as an industry have not grasped the scale of the change that's on its way, right? 4 years of a regime that was violently anti-crypto, did everything they could to basically shove every crypto company offshore, get it out of the United States. And even if you did everything that the regulatory agencies asked you to do, Then after you did all those things, they sent you a Wells notice and sued you or hit you up for some sort of regulatory issue that you had to defend to the tunes of millions upon millions of dollars in legal fees. Now it's just going to be the opposite. It'll be the opposite of wide open spaces. I've heard Tillman say this before, like, okay, until we get actual, crypto quote unquote regulation from congressional or whatever it happens to be, what are the, how do you evaluate, what you should do as a particular project? Well, bottom line is the president himself has come out with, crypto projects associated with NFTs and the like. So if your base case is, well, I think I can probably get away with what Trump has done over the past 12 to 24 months, I'll probably be okay as a company if I do this, and this in the same way that they did it. And so that just opens up a huge amount. Again, from an innovation standpoint, you have wide open spaces. And then from a regulatory standpoint, all those obstacles and walls are knocked down. And then on top of that, you have banks that are going to figure out a way to make money custodying Bitcoin and Ethereum and the like. Then on top of that, you've got Bitcoin ETF and Ethereum ETF flows. Then on top of that, you've got Bitcoin strategic reserves at the federal level and at the state levels. Then on top of that, you have companies that are adding Bitcoin to their balance sheets. And then on top of that, you have nation states that will follow the United States if they do a Bitcoin strategic reserve. Like, holy smokes, and we wonder why XRP is at $3.
Well, on the XRP front, I have probably a jaded perspective, and I don't want to get into that, but I will say this: I found it very interesting that Ripple launched a stable coin. Why do I find that interesting? Well, I don't quite understand how it fits into their universe, quite frankly. And I also know that there's a tremendous amount of cash that has to be behind a stable coin in order for it to work. And it would beg the question, is there going to be a large transfer of value from the 50% holdings that they have, or whatever the percentage is, into that stable coin? And what I found even more interesting is that they launched it right as, I think Europe banned Tether or USDT, and that seems like one of the unanswered areas of crypto is like, yeah, we can kind of get our arms around Ethereum, Bitcoin, Solana, all these like major coins that have their own ecosystem, have their own use cases, have varying value points and weaknesses attached to them. But what about the stable coins? Because that to me is a necessary part of this industry. And you have some clear winners, in my opinion, that have done it the right way, but they're still facing headwinds. I mean, I don't think there's anything but really, really valuable stuff to learn from Tether. But why are they getting banned in countries? Like, why is that look? And the only thing I can think of, and this is completely speculative, but that the CBDCs are still being talked about. That a dollar equivalent or the fiat equivalent has to be a part of this conversation long term. And I would speculate that the governments are going to take a forward-facing approach on that and use some of these technologies to, I mean, if Tether's primary value is that T-bills are really behind the store of value of the stable coin, who could do that more effectively than anybody? How about the Treasury Department? That would be an instant way to launch something and have liquidity come in the trillions, is the point.
Yeah, there's a big push and pull associated with stable coins, and I can just refer to Jamie Dimon's commentary a couple days ago. So Jamie Dimon's commentary is I still don't like Bitcoin. It feels like a Ponzi. It's only used for illicit means, which is all ridiculous, old school commentary that he's just regurgitating. But he did say, but I do think there is some value in crypto and blockchain, right? So what does that tell you about banking at the highest levels? We know that Bitcoin probably is a threat long term to all the things that our businesses are built on, right? While at the same time, we have to find a way to come up with something that may look, feel, and sound like it, that people end up wanting to adopt and use. And so we fill that void and we keep Bitcoin at bay. So I think there's the stable coin stuff is there's a big push and pull associated with that, not only from a government standpoint, from a corporate standpoint. They haven't figured it out. And then on top of that, a company like the reason why I think to me, it feels somewhat simple. Ripple and their executives see an opportunity with the change in the political winds, and they've gotten as close as they possibly can, giving huge amounts of capital and donations to the Trump inauguration, fund, and doing all sorts of stuff as it relates to his campaign. They were huge dollar supporters, which then got them an invitation to Mar-a-Lago, right? So Brad Garlinghouse and some other guy at Ripple, took a picture, at Mar-a-Lago with Trump, so they had a meeting. So they're again, this is can be frustrating, but they're using the proceeds of XRP sales to put themselves in a political position where their Ripple stablecoin has a chance versus everything else, and that's effectively the business plan. Let's make a lot of political donations so we're in a good spot. So when some of this stuff starts to break open, we at least have a chance in the race, right?
And for them especially, they're not just some company that's coming out of nowhere, right? They're the guys who spent however many hundreds of millions of dollars over the last in years here fighting the freaking SEC on that. So it's not even just that they're dumping all this money into it, but it's like they're like, listen, we've been out here doing the work trying to do this. Which I think if you're Trump coming in and you're like, listen, I want to be taken seriously as a pro kind of crypto president. Well, these guys, regardless of what people think about XRP, these guys have actually been, they didn't bow down. They didn't just suck it up and take the loss. They've spent hundreds of millions of dollars. And for somebody like Trump, especially with what he's done in the last couple of years, with all the, I think with all the, all the indictments and everything else, and he's had to spend all this money and time fighting that. I think that's it
resonates with it. Sure. Yeah. That lawfare issue, resonates with him. And so they can, they've got some connective tissue associated with, we look at the same thing as a corporation. They tried to kill us.
Find the disservice is really the fact that they're getting the credit for it. The credit really goes to all of the people who bought XRP prior to the lawsuit, because they were selling into those buyers, and that's how they generated the cash to pay for those lawsuits. And so, I don't think that the trajectory or their path, quite frankly, should be modeled. And there's a big underlying question for me as it pertains to, if the technology is open source, right? If tomorrow the Treasury Department could open up a stable coin and copy the technology, line for line, and they have the ability, they are the issuer of money in the world. What do they need Ripple for? What do they need anybody's stable coin for other than their own? And why would they allow a company or even retail to participate in essentially the upswing of that on the back of their liquidity, when they could take 100% of that pie for themselves, right? They could start over, they could launch, their own stable coin and or their own, cross-border settlement token, and they don't have to deal with, Ripple owning X% that's locked up in the coffers, and they don't have to deal with the repercussions or the consequences of essentially creating the 800-pound gorilla on the other side of it. They could just do it themselves from scratch and harvest all of that upside for the U.S. citizens, like for us as a country. And I personally think that probably will be the likely outcome. I think CBDCs are they didn't go away, and people are
Yeah.
still talking about them. It's still a fundamental need. Like settlement time is a final settlement is one of the major things that Bitcoin showed us is a driving factor in increasing efficiency,
Yeah.
reducing friction in the banking system. All of those things are still present and they still exist. And you have banks, international banks that have Nostra Vostra accounts where they're sitting with trillions of dollars that are it's hung up in escrow until final settlement is reached. Well, just freeing up that cash should be priority number one, in my opinion, because what type of liquidity, and it's kind of like having to hold cash on hand if you're going to hold Bitcoin. Well, now there's no reason to hold all that cash if you have final settlement within 2 seconds or 3 seconds. They can literally put all that liquidity back into the markets, which it's not meaningless. I think the last time I saw it was like $11 trillion that is held up in escrow between international banks waiting for settlement time. And the simple example that it was given to me 5-6 years ago, which was, let's say you're an international company and you have employees over at a factory in another country, and you have to make payroll every week, which means you have to take money from one. You have two choices. You can have a ton of money sitting in their currency, the native currency of that country, and you're subject to inflation and instability in the fiat itself. Or you can keep it in the US dollar and make monthly transfers to the degree that you need to pay those bills. Well, if I've got a massive operation, international company, how much money is stuck in payroll in escrow
Yep.
before it actually gets to the employee and it's settled, and how much fees are attached and associated with those transfers? Well, I think you'd be shocked at the number. It's astronomical. And so what that means is all that liquidity isn't being provided for other purposes. It's not, it's locked up because they're forced to lock it up because the transaction hasn't settled. They have to keep it available in case the transaction's reversed. And so if you can't reverse transactions, and that comes with the CBDC, a CBDC from the United States would solve that problem instantly, right? If you want to get paid internationally, guess what? You're getting paid digitally in this dollar equivalent that we've created, and settlement time is now 3 seconds, and you can do it on Saturday night and Sunday, and there's no holdover for payroll between Friday and Monday. It just wipes out an incredible amount of friction in our banking system. And if you remove friction from the banking system, guess what you get in the retail market? A huge multiplier on that money. So if you free up $11 trillion in cash, what's available to lend out? $111 trillion in lendable cash. That force multiplier, in my opinion, is too big to ignore. And I would expect Trump to address it in his presidency. I would hope he would. In my opinion, it's probably one of the biggest things that you could address. But XRP and Ripple have been trying to solve this problem with great resistance from day one. And I don't see, even if Trump loved the concept, why he wouldn't just take it and do it himself, is I guess the point. But I'd love any of the hardcore XRP believers out there to give us your 2 cents and your knowledge and your wisdom on this, because maybe I'm missing something. I don't, maybe I'm not seeing the full picture.
Yeah, Mr. Smith was saying XRP is a ledger infrastructure. They will just rent it to Uncle Sam gladly for some fees.
Yeah, but the ledger infrastructure is is not the secret sauce. It's the blockchain, right? And the blockchain's open source. You can create, you know, you can create that token tomorrow. You just won't have any liquidity in it. But the government doesn't need your liquidity. They have their own printing presses that can generate that liquidity. And if you're getting, if you're removing Nostro Vostro accounts, for example, you're getting a jump start with $11 trillion in liquidity. You only have to print money to put into it. You're now the largest stable coin in existence by a long shot, and it's on the back of freeing up money that should be freed up anyways, is I guess the point.
Yeah, I think that's really interesting. When we look at it, because again, a few years back was the whole talk about the CBDC idea coming in, and then over the last year and a half, the talk's been about the stable coins being the big thing coming through blockchain. And I mean, I love the idea that we would, doing that as you so eloquently put out there. Unlocking that money that's just kind of sitting in there, sitting in there, twiddling its thumbs, basically, locked up in the weight, in just sitting there. And to be able to have that liquidity flowing more, I think is, I don't know, man, that's a lot of money that could be used for a lot of stuff. I think that's definitely something that would affect the markets. And not
just look at it as a
financial markets, but the economies as well.
Well, look at it as a percentage of our national debt. Like, it's a massive number. It's not like literally it could erase the sins of the last 3 years, in terms of our inflation. And that kind of drives me back to the central point that I was making, which is inflation is good and technology is better. And when we as Americans create technology that reduces friction and frees up liquidity, that does more to get us out of the debt hole that we're in as a nation, more than anything that Doge could do, the Department of whatever. Cutting costs can only get you so far. You have to innovate your way out of debt. And we have it right there in front of us, and all we have to do is do it. And so, one thing I have noticed about Trump, whether you love him or hate him, he moves a hell of a lot faster than the traditional politicians. He can digest, and he does not have the fear of moving faster because he learns from his mistakes, and he doesn't care if he makes mistakes. As long as he's got a lot of smart people around him, they're trying to make the best decision at the time. And there's nothing that says you can't pivot off of that decision as you find out new information. And so if you take that approach to innovation, and if you take that approach to running a business, you become very nimble and you stay ahead of your competitors. And if our government is run that way, we become a lot more nimble than we have been. Change will be seen much, much more quickly, and you stay ahead of your competition. So, why wouldn't he take advantage of all of the innovation that has been being built over the last 13 years on the smart contract side, on the CBDC side, on the stable coin, all of that technology we have right in our fingertips for the government to put to use. And if they do, the inefficiencies inside of our government are so large, and the efficiency delta that those technologies bring to the table are so great, that the net cumulative effect is unlike anything else. There's no other mechanism, there's no other button on the board that you can push that would have as big of an economic effect on our country. No different than, imagine what would have happened to the middle class or the lower class if over the last 5 years all of our tax refunds were given in Bitcoin. What would that have done to the middle class? Well, it would have made them exceptionally more wealthy than they are now. And it wouldn't have been a meaningless change. It would have been a very meaningful change. And so, just very small changes on exposing the general population to a frictionless banking system, that opens up liquidity pockets and doors that I don't even think we can get our arms around at this point.
Yeah. Yeah, and I think that's the key takeaway there. You know, it's you've said it a few times here in the show. Is what is to come is likely not even really quite fathomable at the moment, right? We can
No.
do our best from where we're sitting right now and go, potentially this or that, but it's and I guess we'll go ahead and end this here. But it's just like again, if we think back to prior to the summer of last year when Trump first made a couple of comments about Bitcoin. And, the three of us who are talking like, yeah, it would be great and all, but I don't think it's going to be such a big thing. Fast forward just a few months beyond that, and then a few months beyond that, and all of a sudden, this Bitcoin, Trump becomes the first crypto president. Now he's going to have a crypto ball at his inauguration. I mean, legit, it's such a short period of time. And so, if we couldn't even kind of really look at the reality of that, I think there's a lot coming up in our future here from those, kind of weeding out those inefficiencies, innovating our way through that really just, it stands to benefit us as the people versus government, which benefits from obfuscation. It benefits from non-clarity, from hurdles, everything within the government. Then there's companies that make money off that. And at the end, it sucks for the rest of us. So,
Well,
yeah.
if you have it, I would make the argument, if you have a CBDC, if you have a digital version of the dollar that's approved by the government, that they're able to track for tax purposes or whatever their control mechanisms are to alleviate money laundering and all the bad stuff that goes along with that. If they have that infrastructure in place, it opens up the digitization of every asset.
Yeah.
And you can't have that without the CBDC, because you can't have all of your securities, all of the stocks being settled instantly, and then the cash equivalent to that settlement doesn't take place for 3 days.
Yeah.
Doesn't make sense, doesn't work. You have to start with square one, which is you have to have a digitization of the dollar that provides instant settlement across the board. And that's the driving force that then will allow you to digitize everything. And I think that's the stock market 2.0 that we've talked about and we've heard about, being popped up in Texas. But I think that's going to be, just the beginning. I think, the banking side of it is much bigger than the stock market side of it. If everybody is taking, let's say you are you're just a saver, you're a W-2 employee, and you love Bitcoin and you're putting $300 a month in Bitcoin. What if you could buy that at your bank and they hold it for you and they give you a yield on it?
Yeah.
Much, much easier to onboard. All that friction is gone. Everything's gone. And guess what? Because Bitcoin is instantly settled, and if they put in a dollar that's instantly settled, then it just plays nicely in an automated way where you're not having to change your banking structure. You're not having to hire employees that know about seed phrases, and you don't have to do any of that, right? It's all tied to this digital dollar that what would be the largest innovation from a country perspective that's happened in the financial markets over the last 50 years? What's bigger than that?
Yeah.
And if I'm Trump, I'm going, I want the biggest impact I can make. My legacy depends upon it. This is my last 4 years I can ever serve. And let's change the banking system for the better, where there's more liquidity available, less friction, less fees, instant settlement, 24/7 transactional capabilities, and instant settlement into any other asset that's been digitized. Literally anything. I want to buy Tesla stock. If it's digital and you have a digital dollar, you can buy it on Saturday, right? Because the shares
2
don't
a.m. in the morning,
disappear
right?
on the weekend. Yeah, the shares are still there. There's still shares that want to be sold over the weekend. You just can't access them because our current system is predicated on employees working on the weekends in order to get that done. We don't need that anymore. We don't need employees to process paper in order to get things, sold and bought. That's crazy.
What Tillman's trying to say is y'all ain't ready for this. Y'all are just not properly ready for this. And we aren't either. We're trying to get the ideas out there, but at the end of the day, it'll probably be a lot more extensive than even what we discuss here. So
comprehensive. It'll be a
yeah,
comprehensive overhaul of the
comprehensive, yeah,
financial markets. Yeah.
for sure, for sure. Man, loved having y'all here. I know Andrew had to jump there. He had a meeting at 1. And we just kept on chatting. So it is what it is. We can say all the things we want about him right now, and he can't
Well,
say
I
a
think
thing
that
until
was the
next week.
best part of the show for sure. We hit our high note during that time
When
period.
he left. Oh, Lord have mercy. These guys. Hey, before any of y'all maybe take offense to that, because maybe you like Andrew. I don't know why you would, but maybe you do. These are best friends here. They're partners in their company. So they're going to talk a lot of BS about each other. It's up to us to figure out what's really true or not. So,
I come from a football team mentality, and life is a locker room. If you're not giving each other the business, then it's not nearly as fun. So yeah,
that's right.
all of my comments are in jest. I always appreciate Andrew's commentary. He knows a tremendous amount about the financial, the TradFi markets specifically, and kind of how they're trying to integrate into the digital landscape.
Yeah, exactly. All right, so we're going to jump out of here, guys. We kind of ran a little bit over. Hope you didn't mind. As always, be sure to join us every Wednesday, 11 a.m. Central, 12 p.m. Eastern, here on, I think I simulcast this on Facebook and Twitter, X, Twitch. I'm going to try and get it onto Instagram, but the Instagram has like an extra step to do, so I always forget to do that. But anyway, make sure you follow these guys. You can get Tillman at TexasOL61 on X. And you can get Andrew over there at AP_abacus. And of course, you can follow me there at TXWest Capital on there. Check out their company, archpublic.com. Check out my company, TexasWestCapital.com. And just a lot of ways for you guys to get involved in markets, depending on what it is that you want to or don't want to do. I actually think that what they offer is a great complement to what we offer as well, especially their Bitcoin. The Bitcoin algo, the Inks algo.
Yeah. I was about to say you were about to call it the Inks algo. Yeah. Well, what I showed on the screen, what you showed on the screen today, is it reflects the historical analysis of buying on Mondays and selling on Fridays. That is what we love to do. Our software allows you to take any premise that you have, and you can find out whether it's worked over the last X number of years. And then you can tweak it to find out exactly where your sweet spot is.
Lost your volume there. No volume.
Teach people. Yeah. Can you hear me now? Yeah. It's completely user driven, and we love to teach people how to use the tool for themselves, because there's nothing that's more powerful than you building confidence with your own 2 hands. I think between the two of us, we're both educators. We like bringing people information, and if they find it valuable, then that's a blessing. That's a huge deal.
How can they learn? Real question here says, how do we learn more? I guess I think Mark's talking about your Bitcoin algo.
Yeah, you can download it for free for a 3-month period just to try it.
Look at that.
Go to archpublic.com. You'll see the Bitcoin algo. Click on it. It'll walk you through kind of a process of onboarding. And after you do that, it's pretty imperative to reach out to us and schedule a time to where we can show you how to use the software and teach you how to run historical analysis against different parameters, and show you some of the historical case studies that we've done that give you an idea of how to get where you want to get. But this is like having an excavator delivered to your house. There's an infinite number of things you can do with it. You can dig a swimming pool. You can build a foundation for a new house that it's very, very useful. And for whatever you're trying to do, we'll teach you how to use the excavator to get that done.
Yeah. And so, again, we're about to get out of here, guys, but, I've been saying it, since they've been talking about for a while here, since they launched it. And for me, if you guys have been following me for any length of time on my Friday show or, anywhere else, I'm a trader, but I'm a big proponent of having another bag of just Bitcoin. Yes, I trade some Bitcoin along with other things, but I have a bag of Bitcoin that I just add to. And, especially if you're coming in now going, man, how is Bitcoin even worth it? Well, forget the idea of even just protecting yourself against inflation. But if you want to really kind of find a way to kind of buy it, buy at the right times, kind of, just continue to buy rather than just whenever your emotions take you, I think it's probably a great way to get involved in that. So even if you're trading, man, try out the algo for your bag that you're holding there to find, the times to buy there and just kind of build that bag.
Well, and listen, it's also about timing. You can't sit in front of your computer and wait for the dips every
No.
day, all day long. Like it's a convenience thing. I think those 4 dips I was talking about earlier, most of them happened on Sunday night at 3 a.m. or Monday morning, 3 a.m. You can't be ready all the time. So
Yeah.
technology is changing to a point where you can tell technology, you can tell a piece of automation what you want it to look for. And when that criteria is hit and met, then it acts on your behalf. And it doesn't matter if it's 3 in the morning, doesn't matter if you're highly emotional or having a bad day that day and don't feel like getting into your brokerage account and buying. It's just doing it systematically, and it's doing it on your terms, which is it's removing emotion from the trading process. This 90% of the battle, as far as I'm concerned.
And you can't be free, right? Free for 3 months. And then you got to
Yeah.
get out there, test it out, try it out, get it on it. As always, remember, the only thing you control is how much you lose, guys. That's it. All right. So risk management in some form or another should be at the top of your list. If you're coming into the markets, whether you're investing, whether you're trading, you absolutely have to do that, because I'll tell you what, proper risk management is going to keep you from freaking out. It's going to keep you from getting ulcers. It's going to keep you from stressing out and crying and whatever when price kind of moves different than what you expect.
Chris, you say that every week, and I want to add a little clarification to that. Risk management isn't just your profit factor. It's not like I'm willing to risk 2% of my stack to gain 6%. Risk management is looking at your overall position and having incredible discipline not to get extended beyond the exposure percentage that is healthy for your cash position, because you always have to live to play another day if you want to be a trader. And so anytime you start getting those balances out of whack, you're risking your ability to play tomorrow. And those positions, in my experience, are the ones that haunt you, because you start selling yourself a whole bag of lies in order to not sell and take those losses.
That's right. You lie to yourself. We're good. We do that so well as human beings, right?
We do.
All right, man. Appreciate you being here as always. We'll see the both of y'all again next week on, guys, I guess Wednesday next week, whatever Wednesday of next week is. What is that, 22nd? So we'll see y'all then. And I'm sure we'll have a lot more stuff to talk about in terms of Bitcoin. It's a week and a lot happens lately. Oh, and by the time we're going to have the inauguration. So maybe we'll, I don't know. I don't know. Maybe we can get somebody that's boots on the ground at the inauguration to tell us all about the good, the little gossip that's going on there.
I know our friend Gary is going to be at the crypto ball in the VIP section going live. So I will definitely be tuning into that. And I think there probably will be a lot to talk about just from kind of an observation perspective of what we're able to see through that window. So
for sure. So you guys be able to check that out. You can check out Gary Cardone. He's at Gary Cardone on there on Twitter. And I believe he's also youtube.com/Gary Cardone. So check it out. He'll go live for that.
If you want behind the scenes of what $1 million ticket costs, it'll be an interesting live stream to watch or spaces to participate in for sure.
There you go. There you go. All right, y'all have a great week. Trade safe. Stop thinking the top is in. It's not in. We're going to continue to go higher, stocks and Bitcoin and alts. And the only thing I'm going to say is, listen, guys, if you're looking for alt season, if you're sitting around waiting for alt season and you're not taking opportunities that have presented themselves over the last year with alts, you're doing yourself a disservice. Pay attention, guys. There's a lot of opportunities out there, all right? Again, XRP, look at that, back over $3. So y'all trade safe. Have a great week, and we will catch you, next Wednesday. Take care, everybody. Thanks, Tillman.
See you, Chris.